Welcome to the Times of Industry Show. A first-time guest today, but an exceptional person and a great commentator on precious metals and hard assets in general. Jeff Neilson, who is with dynamicwealthresearch.com, and he's going to be launching his own newsletter very soon here. And I am very excited to have him on because he was right. He was right, and that is very rare. He was right in 2016, and I want to know what he's thinking right now about everything that's going on. Jeff, thank you for being on the show.
My pleasure to be here.
I want to first ask you about something very controversial. I know you're going to love this one. The gold-silver ratio. Everyone keeps saying it's out of whack, historically out of whack. It has to go back to 16 to 1, 12 to 1, etc. It's ready to close that gap. It's ready to double. You should double down on silver. I've been hearing it for years. And obviously with 123 to 1, but on the flip side, Jeff, I've never seen a trade work well when everyone's just buying one side of the sentiment. What do you think of this?
Well, I mean, this has been a trade that's been building for so long that I don't think you should be quite as alarmed as seeing sentiment, sort of lining up more and more squarely on one side, because there's just no fundamental factors that can support this phony pricing. And it starts with the characterization by the mainstream media and the bankers that silver is quote unquote an industrial metal. And, this is fundamentally wrong. And it's the myth is perpetrated primarily through the way they characterize demand for silver. I don't know how familiar your audience is with the silver market. In terms of physical silver, precious metals continue to be dominated mostly by India. I mean, there's tremendous amount of demand in China, in Russia for gold, and some other areas. But India has traditionally been the market for precious metals. And of course, India has this massive peasant population approaching 1 billion people with basically no access to banking services. So for this peasant population, they don't conduct their lives in paper rupees entirely. Of course, they use it for some commerce, but their wealth is typically worn personally around their necks in the form of gold and silver jewelry. And so in India, jewelry, especially for the peasant population, is not an industrial good. It's not some luxury good. It's their savings account. And for instance, in 2018, when demand spiked in India, by itself, India imported 1/3 of all the silver mined on the planet. And of course, the vast majority of that went to the jewelry market for monetary purposes, not industrial purposes. And so you put that together with the investment demand in the West, the monetary demand in terms of minted coins and that, and the total demand for silver still stacks very closely to 50-50, or even weighted more towards the investment precious metal side. The fact that silver is such a tremendously useful metal in a variety of industrial contexts doesn't make it less precious, it makes it more precious.
Very interesting, Jeff. I want to ask you about oil. Oil prices in America measured by the West Texas Intermediate benchmark yesterday with the expiry of the May contracts. It traded even as low as minus $40. Obviously, no storage facilities. We all know the story. You have to go to Cushing in Oklahoma to get it. People were naked on it, and now it's trading for like $2. The Brent which is used in Europe, Middle East, and Africa is like $20 a barrel. So obviously, and there's an April 30th expiry for that option. So we'll see what happens with there. But what are some of the ramifications of what we're seeing right now?
Well, of course, it speaks in general to the weakness of the global economy, and not just post-COVID. We have to look back to pre-pandemic, and generally the weak demand picture in the global oil market. And primarily weak demand in the West, and in the West even particularly weak demand in the US. So there's been all of this media hype for the last 12 years about the quote unquote US recovery. And I've previously raised a lot of questions about the actual existence of this recovery. For one thing, there's been no new jobs created. That's obvious if you look at the civilian participation report that the Federal Reserve puts out. But the other thing that's remarkable is that oil demand peaked in the U.S. and it's actually below previous peak levels from earlier periods of growth. So my question, whenever I hear talk about the quote unquote U.S. recovery, is what sort of economic recovery can you have that consumes less oil? So there was the starting structural problem of demand weakness, particularly with the anemic Western economies, and then there's underperformance in a lot of the emerging economies. A lot of it to do with the low levels of the currencies we're trading at, which acts as a tax on the economies. So we had this depressed demand picture. Then COVID strikes, with inventories extremely robust, and all of a sudden you've got these massive flows of oil based on projections for world demand that haven't been materializing because these demand projections have been inflated. And so then you have a shock where there's basically all the supply coming on the market and a plunge in demand, and boom, the supply capacity gets used up very quickly. So
That's a
I
big,
mean,
big
this
story.
is obviously going to be a crisis for the oil industry over the immediate months until something close to normal resumes for the global economy. But even once we have something like normalcy again, I think there's going to be some structural problems with the oil industry for the foreseeable future.
Yeah, it's very interesting, and obviously, it's unlike the stock market, Jeff, which you can use tools immediately, like the Federal Reserve can immediately do something. Oil is not under the control of the American Central Bank or something. It's not only a global commodity which can't be that easily maneuvered. It's also a very political one. So it takes a lot of countries to get something together there. I want to ask you, what do you think are the ramifications of the Federal Reserve and what they're doing with buying, treasuries, obviously buying ETFs and junk bonds, they're buying basically the entire Russell 2000 debt. What does it mean? What does this mean for investors? What is this?
Well, I guess two ways to answer that. First of all, what we saw in the 2008 financial crisis was the Federal Reserve and Western central banks panicking and engaging in all of these unprecedented credit and monetary operations that were far more reckless than anything we've ever seen in the history of our monetary system. And now, what we've seen with the COVID pandemic is essentially that same level of panic, almost multiplied by an order of magnitude. Federal Reserve is doing more of everything it was doing in 2008. It's doing it faster, and of course, as you mentioned, it's launched these even more extreme asset purchase programs and credit facility programs that just go so far beyond anything that would have been contemplated prior to 2008. And we've entered into this surreal monetary world where crazy interest rates, insane levels of money printing are treated by the myopic mainstream media as being normal. And of course, there was nothing at all normal about interest rates or monetary policies before COVID. And again, people are focusing on the panic and what's happened since then. But some very smart people were already looking at the U.S. financial system and the Federal Reserve operations pre-COVID. In particular, the Fed's sudden and extreme level of activity in the repo market. So altogether now, the Federal Reserve has pumped somewhere around $8 trillion into repo operations, but like 5 trillion of that was all done well before COVID ever appeared on the radar of financial markets. So there was obviously, well, I mean, there's two ways of looking at it. There was either obviously some major stresses in the U.S. financial system that were kind of, below visibility that the Federal Reserve is addressing towards the latter part of 2019 and the first, part of 2020. Alternately, if you have listeners that are more conspiracy minded, you have to ask yourself if the Federal Reserve was preparing back in September for the COVID pandemic.
Well, let me ask you about the COVID pandemic, because obviously it's everything that everyone cares about right now, and they should care about it. Was it and is it handled correctly? So much studies are out there right now that are saying, hey, we overblew the severity of this. The exponential growth of patients could be, you know, could be something that infects everyone, but the number of people on ventilators and the number of severe patients and deaths is linear. It's not exponential. That is what a lot of these models are missing, etc. If we open up the economy and get herd immunity and just protect our high risk groups, it seems like we will get a better result, because we will not have a second wave, and obviously all the young people will do their part to kill the virus. But I want to ask you, do you think this is even correct? What is your research on this? And what do you think will happen right now when they reopen the economy? How bad would the depression be?
Well, there's still so much uncertainty about the true nature of the virus itself. But three factors. Once I looked more closely at the scenario, three factors troubled me significantly. This is a particularly contagious virus. It has above average, contagious factor. Uh, it also has an abnormally long incubation period. The medical literature is saying that incubation can take at least up to 14 days. I've seen some reports that it can be as long as 21 days, and so that is problematic because unless you're doing almost universal testing, it means that it can spread invisibly, and of course exacerbating that is there's a significant but unknown percentage of asymptomatic carriers. So you put those three factors together, and it makes containment extremely difficult. As to whether the policy responses have been correct, that's another variable we can't answer today because we don't truly understand the mortality rate. For instance, where I live in British Columbia, only a tiny sliver of the population is being tested. So we know that the official case count is only a fraction of the overall number of people infected, but is it a fraction in terms of 1% or 1 in 1,000 or 1 in 10,000? That's something that nobody can put their finger on at the moment. Anecdotally, I have some contacts in the medical profession who insist that this is the real deal in terms of the severity of the virus. It is extremely taxing the resources of the medical system, even in countries that aren't at true extreme levels of infection. The one other factor that needs to be put into context is the so-called herd immunity. So at this point, I'm hearing extremely mixed reports as to whether, in fact, people automatically develop immunity. There's a lot of anecdotal reports about people being, having cases recur, whether this is reactivation or reinfection. People who were diagnosed with COVID, but then they're not displaying any antibodies in their system. So, the assumption of herd immunity could be extremely dangerous if, in fact, there's not the normal and expected level of antibody development that shields people from reinfection.
Very interesting. Look, I want to ask you lastly, what are you up to these days? Where can people check out more of your work?
So, I sort of left precious metals for a few years and went to work more in the market side with a company named Stockhouse Publishing. And there I got to work with a lot of public companies, a lot of mining companies, got a lot more in touch with the mining side of the business. But then, towards the latter part of 2019, myself and a couple of partners decided that, precious metals was looking very interesting again. And so we started making plans to, get back into that on an active basis actually just before sort of COVID came around, and now we're still sort of retooling exactly what we want to do there. But I have been putting out some content on an affiliate site. We have dynamicwealthresearch.com. So people looking for some of my precious metals content can see some stuff there. I've also done a little bit of macroeconomic work as well, and I'll be continuing to add new content there as we prepare to roll out the new site.
Well, hey, Jeff, it was a pleasure having you on, and good stuff. We'll definitely check back with you in the future.
Sounds great. Pleasure to be here.